everyone, good morning and welcome to Market Fatafat. I'm Arvan Dabash. Remember, we're taking off from fairly negative cues from across the globe, and now the details on the screen don't seem to inspire any confidence whatsoever. It's been a disastrous 2018 for the US markets, and now the US futures have extended the decline, with the Dow futures pointing lower by 200 points and S&P futures as well down, as the Asian markets are extending their declines. We're a tad unperturbed in comparison to the rest of the globe, but don't know what the afternoon trade could bring us. Well, this is the show that spells out all of the top stocks to watch out for. So let's get started. Our team of research analysts all standing by. There's Kunal Bothra and Alok Jain who are with us on the technicals. Let's get the ball rolling then and begin with the metal stocks. All of them are definitely on the bearish side when it comes to brokerage CLSA. That has written a lot of the names off. That's Tata Steel and Focus first up. Movina.
Well, yes, after Morgan Stanley, after Citi, now it's CLSA that's actually downgrading Tata Steel, and several notches all the way from a buy to straight up a sell, with the target price at 460 rupees. And it's not just Tata Steel, even Hindalco and JSW Steel have been downgraded. But specifically for the ferrous space, they are a little more bearish because they believe that, steel prices have only been falling, the spreads have been contracting globally. In India, still relatively a little more resilient because demand expectations are better, but that has really not spared Indian spreads as well either. I mean, there has been contraction there too, and hence they are a little more bearish on the ferrous bits. So Tata Steel, JSW are some of their sell calls. Additionally, what's adding to the pressure in the metals complex is the China December PMI reading, which indicates a contraction. The number has come in below 50. This is the first time it's come in below 50 since May 2017, and that certainly is spurring further bearish sentiment in the commodity complex.
All right, that's the take coming in. A lot of negatives being factored in, a downgrade from CLSA. Meantime, let's move over then to another large cap from the Tata Group, but this is one that does inspire a bit of confidence, and that is TCS. Moving from strength to strength, Kunal, you believe that now is a good time to nibble in?
So I think, yesterday I'd given a buy call on the Nifty IT, and the core reason for giving a call was that TCS looks to be forming a short-term bottom. And today the stock has rewarded quite well. It's up more than 1.5%. But I think the more important part is that the stock is now restarting a new uptrend. So that correction or mild consolidation seems to be getting over, and I believe that the stock should restart a new uptrend. So this should be a trend for TCS. Hence a positional target of 1980. I'm suggesting a buy with stop loss at 1900.
Okay, that's the take coming in. There is potential on the upside, 1980 even being flagged off. Well, let's move on and chat autos, and the one name that definitely comes to mind is Eicher Motors. So Pranay, take us through the abysmal numbers.
Well, yes, it's a 13% decline that they've seen in the Royal Enfield sales for December. That's lower much than what the street and the analysts had penciled, and therefore estimates for this year on the volume front by Motilal Oswal have been cut by about 46,000 units, which is nearly 3 weeks volume, and even more by about 69,000 units next year. So they are lowering their EPS estimates by 6 to 9%, and therefore it is a top loser in the auto pack today.
Look at it, the stock is definitely skidding lower in reverse gear, if you will. 21,705, 6.5%. Well, let's keep it with autos then, and Bajaj Auto put out its numbers earlier this morning, and the stock reaction is a tad unwarranted because it has been a good set. The total sales are 3.46 lakh units for the month of December. That's an 18% growth from last year. Exports as well have jumped nearly 16% to 1.65 lakh units. And you've got the domestic sales number, which has come in encouraging, 21% higher at 1.8 lakh units. Even the motorcycle sales have grown quite steadily, 31% to 2.98 lakh units. It is the three-wheeler sales that have fallen sharply, 26% nearly this time around. Well, Bajaj Auto finding its feet at 2,700 levels. Moving right on then, away from auto to metals, and let's talk about the kind of pressure that we're seeing across the board. Vedanta is one of the casualties to that.
Well, I think, Aman, we are going to talk a lot about metal names today, the way stock prices are performing. Mubina mentioned about the brokerage firm report, which has downgraded many metal stocks. But then also one of the reasons for metal stocks to go down today is Chinese PMI data, which is sub 50, which highlights contraction in the economy. And hence that would have an impact on base metal prices. And that's one of the reasons why metal stocks are correcting. Vedanta, why? because that stock is again moving towards its 190 level, which has been acting as some support. But this time it is moving with a lot of formation of short positions. Volumes are high, which means that it might go towards those levels and probably challenge it too, and that's the reason we're discussing about it.
Okay, keep an eye out on Vedanta. Yes, we will be flagging off those metal stocks that are falling like one after the other. Moving on then, let's also chat about SBI and talk a little bit, Alok, about the technical trends. What is it that you're seeing on the charts? Is it going to be smooth sailing for SBI, and what are the important levels to map out?
Yeah, hi. So SBI has been a reasonably good long setup. It made its yearly low way back in May 2018 and has been inching up. And recently, today, it has crossed its previous resistance level at 300. So I think with stops at 293, one can go long in SBI and keep a target of 312. And above 312, if it sustains by the end of the week, we can expect a move to 348 to start.
That's the view coming in, a promising bet for the long haul. Meantime, NMDC as well is a newsmaker today, but Mubina, take us through what exactly is the plan now.
Well, while the rest of the metals complex is falling, NMDC is something that is being able to hold on very, very smartly. This after the company announced yesterday that they are going to be holding a meeting of the board of directors on the 8th of Jan to consider the proposal for a buyback of equity shares. Nothing new, honestly, because with the government already listing certain PSUs which will be candidates to announce buyback, it's kind of obvious that this was going to come through. Do remember that the government does have its divestment goal that it wants to meet, but due to the absence of buyers or potential strategic investors, they are resorting to having PSUs announce buyback. So this is a method for the government as well to garner funds and to essentially sell off some of their holdings in PSUs. So this buyback is something that has caused the stock price to stay resilient while the rest of the commodity complex is falling.
All right, that's important to keep an eye out on. This one definitely bucking the trend. NMDC holding out smartly in trade. And then there's Jet Airways. Pretty much every day we flag off this counter because there are always new developments. So let's get in Pranay to flag off the latest. Pranay.
Well, they missed their interest and principal payments to the consortium of bankers led by SBI. As you well know, they were earlier in talks with SBI, to hand them a 1500 loan, given the fund crunch that they are facing, which is evident in their 30% discount that was being offered on many flight routes, which no other real competitors were also trying to match. So given the temporary difficulties in their cash flow mismatch, they were not able to honor these payments, and therefore the stock is down by about 2%.
All right, that's Jet Airways for you, delaying their payments to banks to 74. Meantime, then there's Ashok Leyland as well from the auto basket that came out with its numbers, and it's not really been a fairly encouraging set. The December sales have plunged 20% to 15,493 units. That's quite a sharp fall, and that's largely can be attributed to the subdued consumer sentiment. They've sold nearly 15,000 units versus about 19,000 that they saw last time around. So this has come in below what the street was expecting. The MN HCV segment has registered a 29% decline, 11,295 units, while LCVs or light commercial vehicles, well, has seen a drop of 27% to 4,198 units. The stock, no wonder then, is down 2%. At number 10, Federal Bank is being flagged off. We spoke with the management regarding the MSME news today, but at 95, what are the observations today for that?
Well, I would take that Awan and Federal Bank. Yes, as you mentioned, the MSME related news, management spoke about it, though management and a lot of experts have been talking that not from the lender's perspective but from borrower's perspective this is a good news. Nevertheless, small banks are doing pretty well in today's trading session, and Federal Bank is no different from that space. We are seeing long formation, 95 resistance is getting challenged, so watch out for this name. If it moves decisively above 9,500, there will be more buying interest. That's what statistics are revealing.
Okay, there you have it. That's the take coming in from Federal Bank. Long formations being seen in the future segment. And then Ujjivan should be flagged off as well. Kunal, why does it merit a buy at the current levels?
So I believe, that this stock is showing a very interesting chart pattern. I think a couple of weeks back the stock had a almost a 10 to 15% rally gradually. Then you had a sharp rally coming, I think, end of last week, and then the stock consolidated. Now in this consolidation and the process of rallies, indicating that there's a bullish flag pattern forming for Ujjivan, and most of these NBFC stroke HFC stocks, they've been looking very positive, or they've been showing some good price momentum. So I believe Ujjivan should complete this price pattern and break out on the upside. I would suggest a buy at current levels. Targets could be kept at 300 and stop loss at 270.
Kunal there placing his bets on Ujjivan, which is in the green by 2.5% nearly. And then there's another auto stock that merits a mention, and no surprises to see a disappointment from Tata Motors, Mubina.
Well, that's really been the trend from Tata Motors from the auto pack for the last couple of months. For the month of December, the total sales have come in at a little over 50,400 units, but indicating a decline of 8% on a year-on-year basis, because December of 2017 saw them posting a sales figure of 54,627 units. Commercial vehicle sales in the domestic markets as well have dipped a whopping 11%. Only at 36,180 units is where it has come in. Local car sales are just about flattish with a minor uptick, only 1% uptick. And the total exports as well have dipped a whopping 36%, coming in at 4,000 units. So Tata Motors on account of that as well is declining.
All right, yes, that is definitely the trend that we're seeing for Motown, Tata Motors included. And then Natco Pharma merits a mention. Let's talk a little bit about what the company's new strategy is going to be. And Pranay, give us more insight.
Well, Avan, they are looking to shift focus on their R&D spends, and now are planning about 60 to 70% of those R&D budgets to go towards the emerging markets, where there is more scope and opportunity for them. So markets like Canada and China are now on top priority besides Brazil. They've had good success in niche launches in US over the last couple of years, but now the pipeline is such that there is limited opportunity in the near term, and with the kind of R&D that they've been doing, they're looking to make those launches in the emerging markets. So 70% is going to be allocated to that, and 30% to US market. That's the change in strategy.
All right, that's clearly the strategy that's being put in place by Natco Pharma, 70% of their funds in emerging markets. And then there is United Spirits that, remember, was under pressure in trade yesterday. Today, Credit Suisse has come out with their report on the Maharashtra Spirits tax hike. Firstly, they've maintained a neutral. They've got a target price of 640, but they have flagged off quite a few concerns. Risks of the other states now looking at hiking their spirit taxes. Remember, the biggest hike that we saw has come in for Maharashtra, and they believe that this can lead to an impact on their volume growth. This could impact their margins going forward, and it's a big negative all in all for the company. So United Spirits then, rightly so, down 0.5% in trade today. Time to shift gears then, and BEML looks like it's showing promise to that.
Well, yes, and I want to remind what we were talking about BEML yesterday. Stock was down by 1%, 1.2%, and there was a substantial build-up of 9 to 10% in open interest in future segment. And we were stating that it is quite possible that you should not read it as a short position, because stock is consolidating. And if those were short positions, then stock should have gone down substantially. And today, BEML is challenging its resistance of which is around 920 in a market which is slightly weak, and 24% rise in open interest. So this is not because of yesterday's short covering. Yesterday's were long position, and today too you are seeing pile up of long position as BEML is set to give you price volume breakout.
Okay, that's important to flag off on BEML at 921. Well, we'll take a quick break right here on Market Fatafat. Do stay with us. We have a whole host of other stocks that we'll be taking note of when we return from this quick break. Back with Market Fatafat, and the market's holding out at 10,870 despite the global rout. The rupee as well is off its lows. Well, let's keep it with names that are in focus, and yes, Bank is the next stock on the radar. In fact, Alok, let's understand technically how does one position themselves? Is there going to be spurts of volatility? Is there some sort of decisive direction?
Yeah, so Yes Bank has been largely a news-driven counter recently, and there's impending news about the new CEO on January 9th, and a lot of build-up is expected to happen before that. So having consolidated over the last many weeks, it has a good base near 165 to 175 levels. So people can build a long position, and I'm expecting it to reach 194 levels and possibly 220 also if a strong up move comes. And stops can be on a close below 180 for positional players. So long for me.
Okay, important to note those levels. Now 194 to 220 is the level seen on the upside. And then there's VST tillers. Let's have Mubina run us through the auto sales numbers. Mubina.
Well, it's the tiller sale and tractor sale numbers that VST has released. For the month of December, they've sold 1,353 power tillers as compared to 3,000 power tillers in December 2017. So it's almost halved from that level, more than halved in fact. It's a massive drop we've witnessed. For tractors, there's still been a little bit of stability, but there as well it's declined. So 611 tractors sold in December 2017. This month, however, it sold only about 602 tractors. So it's really no wonder that you are seeing that dip come by in the stock price today.
All right, keep an eye out on VST tillers at 1568. Meantime, Deutsche Bank has come out with their brokerage note, and this is on L&T. In fact, let's understand what are some of the concerns that the brokerage is flagging off, Pranay.
Well, Aman, while they still have a buy call on the counter and a target price which is in excess of 1600, what they point out is that the order announcements have been actually trailing the estimates and the guidance. And there is a risk that they might miss their order flow guidance. So if that turns out after the Q3 numbers, the order flow guidance could be cut by up to 2%. So the stock is a little soft in trade today.
All right, there you have it. That's the take coming in on L&T. And then let's move on to Moil from the metals basket. And what's the stock up to in trade today? Well, on low volumes, it's holding out at about 169. Well, the company has gone ahead and revised its prices. This is for manganese ore. They fixed the revised prices at different grades. Ferro grade and chemical decreased about 10%. On some of the low grade manganese ore, a discount of 10% has been offered, and the EMD the price has been increased by about 10,000 PMT on the existing price. So a 10% discount essentially coming in on all the various manganese ore grades. That's the revision that the company has seen, and the ferro grade prices have dipped nearly 10%. Okay, let's move on to number 20 then, and that's the banking stock that we're flagging off. So that DCB Bank is in focus in trade today. Do you believe that, what exactly are the kind of trends that are being shown in terms of the movement?
Well, again, a similar story related, which we spoke about Federal Bank, that MSME announcement by RBI is having some positive rub-off effect on these smaller banks. And DCB Bank, case in point, one is moving decisively above its 200 DMA. It is moving with decent volume in cash market segment. In first 2.5-3 years, you are seeing that cash market volumes are already crossing last 2-3 days average volume. And we are seeing formation of long position, 13% rise in open interest, which means that this is not just technically stock moving higher, but even long formation is taking it.
And 1% higher, that's DCB Bank in trade. And let's flag off what's going on with some of the mid-cap IT names as well. There's NIIT Tech as well that's managing to hold out. Do you believe that, this kind of a trend is sustainable? And Kunal, where do you see the stock headed from 1172?
So, this mid-cap IT stock is very interesting on charts, not just on price basis, but more on the indicator front, and especially one of the key indicators, which is RSI. Now, if you look at the price patterns over the last 4-5 months, I think from the September end, when the stock corrected from 1400 levels to 1000, it's gone through a consolidation phase. But the RSI today has given a breakout, and that too, over the span of the last 4-5 months. So I think that's something notable to take note for NIIT Tech, and that should result into the stock also restarting its uptrend. So I think this could be a very interesting buy, even at current levels. I would place targets of 1225 to 1250 range, stop loss at 1150.
All right, keep an eye out. That's the take coming in on NIIT Tech. Meantime, at number 22, it's Chambal Fertilizers. Mubina, what's the latest news?
Well, holding on despite the weakness we are seeing in the equity markets. Remember that about 3 years ago they had announced a plan to set up a new urea plant for the production of 1.34 million tons of urea per annum at their existing site, that's Gadepan district of Kota in Rajasthan. This would be called the Gadepan 3 plant, and officially now 3 years later the company has informed the exchanges that they have commenced commercial production from this plant, and hence that's providing support to the stock price today.
3.5%, that's an encouraging move. Moving on then, let's talk about the December auto sales numbers for Hero MotoCorp and what kind of management commentary they've given, because this too is in the slow lane, Pranay.
them. The street was hoping for about 2% growth, so it's lower than the street expectations, which is why the stock is down 3%. In addition to that, the management is seeking that maybe in this year the motorcycles get taxed in the 18% bracket and not the 28%. So therefore, you're seeing all these auto stocks being inflated.
All right, that's important to take note of, down nearly at the lowest point of the trading day. M&M meantime, and that's another one that's in focus. It did come out with its auto sales numbers yesterday, and M&M as well did miss the mark when it came to the auto sales numbers, down nearly 6% at 17,000 units. The tight liquidity as well as put pressure, and now Citi has come out with their report. Although they do maintain a buy, they have a target at 1,050. They say that UVs continue to disappoint. The tractor volumes as well have come in much lower than the street estimates, and the CV segment too is in the red, and all of these are big pain points for the company. No wonder then that the stock is struggling at 745. Well, auto and IT sure is the flavor of market for Fatafat. So let's flag off Hexaware and Siddharth talk about the move at 337.
Well, Kunal was talking about how TCS can take Nifty IT higher, and that's panning out accordingly. But it's taking a lot of mid-cap names along with it, and I want to highlight Hexaware here. Why? Because stock is, challenging its resistance zone of 335, 340. It's exactly in the middle of that zone. And this is backed by strong formation of long position. So it's not just large cap, some of the mid cap names are also doing pretty well. And probably above this resistance zone, you might see some sort of short covering, because this has been an underperformer stock and still has a decent amount of positional short standing in it.
Okay, that's the word coming in on Hexaware. Time to move on then to stock number 26. And Alok, let's chat a little bit about the trend in Godrej Consumer. Do you believe that for the long haul it's a good play?
Yeah, Godrej Consumer is a nice positive chart. It has consolidated well in October and November, and it started its current move second week of December. So I think keeping stops at 782, one can target a level of 848. And above 848, it completes a cup and handle formation, and the targets of that pattern can be 900 and 960 going forward in the medium term.
Okay, nonetheless, it's definitely a keeper in the portfolio. Look to hold on to the stock. Well, let's move on as we're winding down all of the stocks that you should keep on your radar. And it's news on JK Cement, Mubina.
Well, yes, do remember it's the QIP which has kept the stock active. They had decided on the QIP for a price point of 732.4 rupees per share, and now they've said that they have allotted around 73.4 lakh equity shares to QIBs. We have had names like SBI, MF saying that they did subscribe to the QIB, and the price point is at 732.4 rupees per share. So today we are seeing some activity come by in the stock price.
At JK at 731, that's JK Cement. Number 28, then CLSA, clearly writing off a lot of these metal stocks. Hindalco, another one, Pranay.
The weakness that we're seeing in China reflected in the manufacturing PMI is going to bear on these commodity prices according to CLSA. So while the bearish view is stronger on the ferrous metals, the non-ferrous ones are also being downgraded. So Hindalco is now a sell for them from the underperform, and the target is 210 from the earlier 255.
All right, that's the CLSA take on Hindalco, and no wonder then the stock is downgrade to a sell rating. Well, with that, we're wrapping it up on Market Fatafat. Thanks so much for joining in, and we'll continue all the action on Markets at Noon that's coming right up.